Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, June the 14th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with some economic data. Across the pond, we got Great Britain retail sales coming in at 1.3%, expected to be 0.5%, so much better than expected there. They also revised last month's number up from 1.6 to 1.8, so even a better revision there. Retail sales looking pretty good out of Great Britain. Then we also got the here in the United States, we got core retail sales, which strips out automotives, came in at 0.9%, expected to be 0.5%. They also revised last month's number up by 0.1%, so came in at 0.4%, expected to be 0.3, or was 0.3. Retail sales came in at 0.8%. That includes autos, expected to be 0.4%. So that better than expected. They also revised last month's number up from 0.3 to 0.4%. We got unemployment claims lower than expected at 218,000, expected to be 213. We also got import prices in line with expectations at 0.6%. Business inventories in line as well at 0.3%. They did revise last month's number up slightly from unchanged to negative 0.1%, so a slightly better result there. All in all, we got better than expected economic data across the board, so that would bode well for equities we would expect. One thing we're seeing here is that we're getting crude oil to come off just a little bit right now, just slightly in negative territory, which reminds me, one thing I forgot to mention was natural gas storages coming in at 96 billion cubic feet, expected to be 87 billion cubic feet, so a slight build there. That's not necessarily going to directly affect crude oil, but that's what made me think of it, especially with all of our fracking. Natural gas is a byproduct of fracking, so that build is probably a lot in part due to the massive fracking that we've been seeing. We saw rig counts go up, but our production really skyrocketing, and most of that has to do with the fracking operations. Anyway, that being said, this oil is not looking too good. It really is looking like it wants to flag out, where you kind of you have a massive sell-off, start trying to claw your way back up, and then another leg down, which one would expect that to go down to around the $63 barrel mark, so another $3 down here if we get that big sell-off like we got like this, where you're flagging up and boom. So that's what I'm looking for. And crude oil, I'm already set up for it with a long put in USO, which is very correlated to crude oil. It's sometimes a little bit of a lagger. Then we've got gold still keeping its 13 handle intact. We did break above the 200-day moving average. We're right below that right now, but that will act as resistance. We peeled through that, but that will act as resistance. The other thing is we'll start looking a little bit more bearish as soon as the 50 crosses over the 200. If that in fact starts happening, we'd need to have a pretty big rally really quick in order to keep that from happening. I don't foresee that. I think it's going to start rolling over. I think the overall equities are going to start driving higher. We've got Bitcoin up about $85. I think if you are a bull in Bitcoin, you really need to see today slam down to this 5,800 and then rally back to about where we are right now. I think that would make the chart look very good, very solid bottom. Not getting that at the point right now, but that today would be the perfect time to get that kind of move in Bitcoin rather than a slow trudge. I think the slow trudge adds a little bit more panic. Like to see a little pop, and then the bulls come in to support that. If you are bullish in Bitcoin, that is. Bonds, pretty much unchanged with yesterday's FOMC basically coming out with not a whole lot of information. They came up and raised rates by a 1/4 percentage point. That didn't really affect the overall market. It was already priced in. Bonds right about where they should be, slightly up about 1/2 point right now. VIX coming off again. Please hold on to the 12s is what we'd like to see there, but we are seeing some volatility come out as the broader markets start to rally. We'll start to see this in some of the other equities, I guess. Dow Jones just slightly in positive territory, was just in a second. I just guess I had to take a breath to get that thing into positive territory. We're up 1 point in the Dow Jones Industrial Average, so let's get out of here. We've got the NASDAQ continuing to lead the charge to the upside. Remember, we were seeing this whole tech rotation out of tech and into the blue chips. We're seeing that re-rotation out, which is why the NASDAQ is blasting up to that trend channel. Now that we're above this 50 Fibonacci extension level, which coincides with the Fibonacci regular setup. That being said, we're above that, so the bulls are probably going to fight tooth and nail to hold on to that today. Then we've got the E-mini S&Ps in positive territory by about, let's call it 10 points right now, near the highs of the day. Overnight, it wasn't looking at that good. As you can see, yesterday going into the end of the day, that sell-off continued in the overnight session. And then, around midnight, my time, early morning, 3 o'clock in the morning, Eastern, that's when we started seeing this rally as the overnight inventory was short, getting flushed out. Coming into the day session, we did sell off and test those guys, but we are moving higher based on the economic data that we were getting there. One thing that I'm going to keep a real close eye on this, I've had an itchy trigger finger since yesterday. Comcast coming out and saying that they might try and buy Disney, Fox. That caused the market to really spike. That being said, Disney has a tendency to have these massive spikes and sell-offs. I thought we were going to get that today. It's not happening. I waited a little bit too long. I'm going to hold it off. I'm looking at it. The probabilities are 2 times the delta, and that's my probability being tested on my 110 strike, which one could kind of say that you're being tested on that 110 strike right now or today. Yes, I am, but that's a 30% probability versus about a 15% probability of me finishing out of the money. I'm going to hold on to my probabilities right now, but it is a itchy trigger finger to say the least right now in Disney. I'd like to see some kind of pullback. I might hold off onto that one more day just to see how it goes on that. My thing is if it breaks above this line here, that's where I was going to go out, and it didn't quite get there. But because I threw in this yesterday late in the afternoon, right after the daily market commentary, to be quite honest, I didn't realize that this news had come out because I was preparing for the daily market commentary. But sure enough, as soon as I shut it down and looked over at my P&L, I saw there was something awry, and it was Disney blasting off to the upside. So I've held on to that, just playing the probabilities. If it does not give me a correction to the downside, I'm probably going to get out of it. But any correction to the downside, I'm likely to get out as well. So keeping an eye on that very closely today. That's one of the thorns in my side right now. And that's about it. Today's webinar is going to be on the put calendar. All right, long put calendar. I don't do the short put calendar. I'll tell you why in the market or in the webinar why that is not a good setup. But the long put calendar is a really great setup for a trade like someone who has just had earnings and doesn't expect to have earnings for a couple more cycles. We're going to try and land right in there and take advantage of expansion and volatility in and around that earnings move. If we can, I'll show you how to set this up to increase your probabilities of success and when not to set this strategy up, which nobody is going to tell you online. They're just going to tell you how to set it up. Today's webinar, all right, check it out, 4 o'clock Eastern, 1 o'clock Pacific, and if you can't take that, take it easy.